What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Lindner. Welcome to a Friday Hangout. Hope you guys are doing well. Not a ton of news going on out there in the Bitcoin space, but I found a really good article from Peter St. Onge, I think is how you say his name, on Twitter. And it's talking about the China doom loop. So we're going to read through that, talk a little bit about the Ripple and Fortress thing. That's the big news out there in Bitcoin land. Price is flat, but we will go over that a little bit here as well. So let me share my screen. And all right, so let me refresh this page because I did just release Market Pro number 27. That is my premium newsletter that talks about price and everything. I go through multiple indicators, multiple oscillators, multiple kind of cycle charts on this issue as well. So if you guys would like to support the show and get more in-depth forecasting of near-term, mid-term, and long-term price targets, you can check out the premium tier over there on bitcoinandmarkets.com. Let's see what else. We did FedWatch yesterday, a new format for yesterday's FedWatch, and it was pretty cool. Had a fun time doing it. Got some good feedback on it. Starting to catch a little traction on Rumble and YouTube. So if you guys are watching it there, make sure you like, subscribe, and comment down below. I will respond to as many comments as I can. Some good pushback on my oil talk yesterday on FedWatch. In the comment section. I think it was on YouTube, and it made me even dig in deeper into that, and I was able to share some links. So, it benefits everybody that watches it. If you have a good question and it brings up a better debate down in the comment section, then people can learn. So that's what we're all here for. We're all learning together and on this journey of Bitcoin together into the future. All right, speaking of that, let's talk about Ripple real quick. Actually, let's go to price. Price is flat. I'm not even going to share this chart with Telegram. Sorry, guys. It's nothing to be seen. 25,876 as we speak right now. Boy, you can just tell with all of the not silly, but kind of marginal news items that are getting big play, like this Fortress Trust, and also the drive chain debate, which has been settled for years. It just happens to have a $3 million boost in its marketing budget right now, but it took over the news cycle in Bitcoin for about a week. So you can see there's just not very much going on to speak of. Everybody's waiting for the ETFs. Everybody's waiting for something to happen. So the next shoe to drop. I feel this also in the traditional markets. Let's take a look at the S&P 500 and see what it has done. Pretty much range bound for a whole month. Trying to figure out where it's going next. Oil up a little bit green on the day, nothing to write home about. The 10-year did not make a new high, back down here. Let's see, 4.25%. We'll see if that turns over and comes back down. That is the big signal of, financial trouble, global financial conditions, is if the 10 years falling, money's getting tighter, and that is not a good thing. What else did I want to say about that? I just lost my train of thought. Something about the 10-year. Also the Fed funds, remember, is at 5.25%, and this is at 4.25%. So does the Fed set interest rates? No, they set a target, and the market will do what it wants to do. So even though this is like scaring people, it's so high, 4.25% on the 10-year. I mean, if it were obeying the Fed, it would be at 5.5% to 6%. That's not the case right here. All right. Some other big news, of course, is the Chinese yuan It is breaking out to a multi-year high. And it looks like China has kind of given in for the time being and are going to it's not rising, sorry, it's falling. This is inverse of the trading pair here. But it looks like they have gone ahead and released some of the control that they were putting on this. The market wins in the end, even if the central banks or the governments, the CCP or whoever, thinks they're in control. The market will beat them every time. And it looks like that's what's happening here in China. But that's going to be the main story here that we get to in a second. And lastly, let's take a look at the dollar. Looked like it was going to sell off today, but it is back green on the day, holding at 105.0. Okay, now let's get into the Ripple news. And let me just make sure, checking all my levels here, that I'm going out in all the appropriate places. I think so. Okay. So Ripple acquires Fortress Trust in cash and equity deal. This is a story from Blockworks. And actually, I am going to link that into Telegram because I used a bad link in the post earlier. So this is what I'm going to be going through. This is important. People were talking about this because Swan, which is one of these like Bitcoin maximalists choice for DCA and everything, they are using Fortress Trust. And now apparently their custodian is going to be Ripple, which is one of the scammiest of scam coins out there. So let's read through this story a little bit. Ripple has acquired Fortress Trust, according to a Friday announcement from the distributed ledger tech firm. Okay. Ripple is, they have what's called a ledger, and they don't even call it a blockchain. But anyway, so they call it a distributed ledger tech firm, whatever the hell that is. In a statement, CEO Brad Garlinghouse revealed that Ripple was an early investor in Fortress Trust, which launched in 2021. Quote, "We've had a chance to get to know the team, its vision and technology," Garlinghouse said. "They've built an impressive business with recurring revenue and a strong roster of both Bitcoin native and new to Bitcoin customers." Ripple wouldn't disclose how much it paid for Fortress Trust, but told Blockworks that the deal comprised a mix of cash and equity. The news comes months after Ripple bought crypto custodian Medico for $250 million in May. At the time, Ripple cited the move as a way to advance its growing product line. The latest acquisition adds to Ripple's growing number of regulatory licenses, as Fortress Trust possesses a Nevada trust license. According to the Martindale-Hubbell Law Directory, a state-licensed trust company in Nevada, quote, "can act as a custodian of assets and act as an escrow agent. Additionally, it can assist in transactions such as cryptocurrency storage and services related to digital security offerings. Licenses are a powerful enabler to build and deliver best-in-class customer experiences for enterprises using Ripple's scam infrastructure across our payments and liquidity solutions." Okay, so Ripple's out there trying to diversify. They are a dead coin walking. I don't think they're going to end up winning against the SEC. The one decision that came out that ruled in favor of Ripple was then contradicted almost immediately in a same level finding in another case. So most likely that decision will be overturned on appeal from the SEC. So Ripple is not going anywhere. It looks like they're diversifying into other things because, they're wanting to get out of the scam coin business. Maybe they're going to be forced out of the scam coin business, and then Ripple Labs will be having control over all these other companies. So it's very interesting. And as far as the Swan stuff goes, Corey Clipson, he said that nothing's going to change right now. It is going to be an autonomous entity still, even though it is owned by Ripple. It's not a good look for Swan, and they'll probably look to get some other custodian in the near future. But a lot of people were ragging on Corey Clipson about this. I don't think it is that big of a deal. You know, I don't know. There's personality differences here in the space. A lot of people are if they even like just having Corey Clipson having a history of investing in EOS and some other scams in the past, they say he can't change his ways and he can't become more of a Bitcoin maximalist or Bitcoin fundamentalist. But I think that's untrue. I think Corey is doing a good job. He's providing a good service for the space. Swan is a stand-up company. So I don't hate on them for this. I just think they're probably going to change their custodian ASAP just because this looks so bad. So, all right, that's enough of that. Let's get into the main China story. So this is Peter St. Onge. I think I'm saying that correct. He has this Substack, and this post is China enters the doom loop. Now, I've been talking a lot about China. If you guys have been following my stuff for a while, you know that China, it was one of my big calls from several years ago. I was talking about China becoming Japan 2.0, the Chinese miracle unraveling into just like the Japanese miracle did. Talking about how the Thucydides trap was garbage way back. This is, long before Evergrande started having trouble. And people were still saying that China, this is the Chinese century, which by now, if you haven't found out that this is not going to be the Chinese century, you need to catch up a little bit, I would think. But my whole position on China, just to summarize this before we get into Peter's piece here, is their whole model was based off of the U.S. order and globalization. And, if you track their progress, once they were brought into the U.S. order, I think it was, wasn't it 89 when they opened up? No, it was 79. But they really didn't make a ton of changes until around 89 and the Soviet Union collapsing and Tiananmen Square and all that stuff. They opened up. And then I think it was 2003, they joined the WTO and they really rocketed higher. So their story, their rise coincides with their integration with the international order, which the U.S. led, financed, protected, all of that. So they depend on globalization. And in an era of deglobalization, which is what we're going through, the Chinese model simply doesn't work. All right. So they kind of know that now. And there's been a lot of academic stuff that's come out. And they're saying, I need to share this tab. Sorry, guys. So they're saying that the academics in China are already they already understand that they need to completely fundamentally change their economic model away from manufacturing and being the factory of the world to a consumer-led economy. They need to jump that middle income trap. But they're not able to do that. Nobody really has successfully been able to do that. I think maybe Japan would be an example. But China, they have grown old before they've grown rich. And they've also now ended in a debt bubble before they've grown rich. So they're on the lower end of a middle income country. What else do I say? They're also communist. And Xi is clamping down in the communist process, from Marx and everything, is they're not against capitalism. That's a distinction that people don't really make very often. But the Marxists aren't against capitalism, but they think that capitalism is self-defeating. So first you go through an era of capitalism, you build capital, and you make people kind of rich from building capital, but capitalism has inherent in it the seeds of its own destruction, and that's when the communism comes in. So I think one thing that the Chinese realized, Deng Xiaoping and all them, back in the 70s, 80s, and in the 90s, is that Mao kind of went communist before they had built up the capital. They needed to go through this period of capital building and then they could have the communist revolution. So Xi is totally on board with Marxism, Leninism, and he is marching them down now a second communist revolution. I really believe that. So he is going to destroy their economy. But their economy, their economic model is over. What else do I have here? So China's rise was enabled by the old system of globalization led by the United States in a rules-based order. And now we're going away from globalization. China's economic model doesn't work anymore. And they're going back towards hardcore communism. Lastly, I'll say that this type of breakdown of deglobalization is really bad for credit-based money. Okay. And being a Bitcoin channel mainly here is that my thesis around this is that as the debt-based money stops functioning as well, we're not going to get hyperinflation. We're going to get people moving back to a actual commodity-based money that can embody the trust itself. So if we are, if the WTO breaks down or if international trust breaks down, the money isn't going to flow. The credit isn't going to be created cross-border. And then you're going to need to have something that can settle, some physical thing that can settle, or not physical in Bitcoin's sense, but, a actual commodity that can settle. And that is where we're going to go back naturally to a Bitcoin standard or to a commodity-based standard. So anyway, that's like summarizes my idea of China. Let's get into Peter's piece here. Again, the title is China Enters the Doom Loop. Is China entering its very own doom loop? China's authoritarian, gerontocracy, oh man, I can't say that one, has built a doom loop with Chinese characteristics, with over half the economy in trouble. Chinese exports are now plunging at the fastest pace since the COVID lockdowns. Exports fell 14.5% on the year, driven by a 21% drop in exports to Europe and a 23% drop to the US. And I shared a chart in Telegram a couple of days back about that. The Chinese exports are just crashing. Now the US largest trade partner is not China anymore. I think it's Mexico, or I'd have to go back and look at that chart. It might even be Europe. In short, foreigners aren't buying and Chinese aren't spending either. Okay. Chinese exports record biggest decline since early stage of the pandemic, while imports decline further. And I have shared similar charts like this on Telegram. This is all a problem for Chinese factories because they're obscenely overbuilt thanks to cheap central bank money and government subsidies. I've talked about this as well. They have all this overproduction and excess capacity because it's build. To give a sense, the Financial Times reported that Chinese automakers can produce 40 million cars a year, but the Chinese only buy 20 to 25 million. China is now actually throttling new car production, denying product licenses, even as the U.S. is pouring hundreds of billions into production that will soon be swept by cut-rate Chinese EVs. This is interesting because it embodies kind of the communist idea here of like industrial production, and they don't understand that you can't just build all this capacity and then by Politburo decide to use half of it. That's inefficient. It doesn't work in the long run. But that's how communists think. All right. They think it's just a problem of management. You'll hear that all the time, especially from the global Marxists that are at Davos, Klaus Schwab and even in Brussels and the top now in Washington, D.C. They are globalist Marxists, and they think everything is about management. We need to manage the economy. Anyway, but you can just tell the communist thinking. Manufacturing makes up over 27% of the Chinese economy and has contracted for 4 straight months now, bringing quarterly GDP growth nationwide to just 0.8%. What happened to the 7% and even 5% targets that the CCP had. I mean, this is quarterly GDP growth under 1%. Okay, the economy just officially entered deflation for the first time since the 2008 crisis. So you can see this black line is dipping below, and I will see if I can copy this image and send it over to Telegram. I think I've shared this before, a very similar image. Meanwhile, China's comically indebted housing industry, also roughly 1/4 of the Chinese economy, is showing new distress, threatening the life savings of millions who could lose it all on empty apartment buildings. And I've talked about that. 70% of household wealth is in real estate. If you want to transition from a manufacturing economy or production-led economy to a consumer-led economy, it doesn't help if half of your household wealth disappears. And that's what's happening right now. Just last week, major home builder Country Garden, held up by China's government as the poster child of prudence and a model for the rest of the industry, missed 2 bond payments on their total $200 billion in debt, leading to a debt downgrade from the now ubiquitous Moody's. Considering this all coming with youth unemployment at record highs above 20%, it could signal political trouble. And we don't know this. That's just the self-reported, and they stopped reporting it. I think the last number they reported was 21% a couple months ago, or maybe 3 months ago now. And it could be 25%. The economy is imploding as we speak. Okay, losses deepen for Country Garden dollar bonds, and this chart just looks atrocious. Continuing down here. Can China reverse the slide? What's driving the manufacturing pain is largely out of China's control. Westerners not buying stuff. Breakdown of globalization, guys. Korea's exports also fell 17%, while 5 of 7 Asian countries were in contraction last month. Just about the only country buying is, ironically, Russia, which, alas, is a tiny market. Mexico with nukes, as the saying goes. Yeah, Russia is like a 15th the size of the United States economy, or maybe even a 20th now. I don't know. But it's a tiny economy. And I'll tie this into some of my demographic stuff that I've been coming out with recently. Korea's exports also fell 17%. Well, all of these guys are going to be exporting less and importing less because they're having less productive people. They're hitting this tipping point where there's way more old people that tend not to spend very much compared to the prime working and consumption ages. So all of these countries, the U.S. is just like 20, 30 years behind them, will follow in the same footsteps. But you have all of these economies that are their main consumers are aging out of that age bracket. So the demand, even if there was no over-indebtedness, even if there was no breakdown in globalization, which there is, breakdown in international trust, they would still be faced with the reality that demand is falling, and it will continue to fall for the foreseeable future. Now you add on top all this other stuff. It's crazy to think that this is going anywhere but down. So China can't do much about Americans and Europeans not buying. That's our recessions talking. And it's getting worse in both the US and Europe, meaning more plunging exports and falling factory prices in China. Eventually, prices fall to the point that factories shutter. And I talked about this in my demographics piece, a reverse network effect, a reverse Metcalfes Law. When you start losing people, demand goes down, prices go down, margins go down, pretty much things start not working. Factories have to shutter because there's just no reason to produce the widgets anymore. That's very bad. And it also goes for infrastructure. There's fewer people using it, fewer people paying taxes to maintain it, and there's less people to maintain it. It's a doom loop around the world. China is just at the forefront of this, being the biggest bubble. China is the biggest bubble in the world. They are, they've Peter Zion, who I agree with about probably maybe 25% of what he talks about, but he says that China is the first country in history to go from impoverished to super powerful, make that transition in one generation. So they're at the forefront of this collapse. All right. The overcapacity dries up and prices can recover, of course, at the expense of potentially millions of jobs and millions of freshly unemployed youth. And this is also an idea for why robots won't help. Robots won't help because there's just nobody to produce for. There's no reason, people think of robots are going to help because there's going to be a labor shortage. But no, it's a demand shortage. It's fundamentally a demand shortage. Of course we can put in automation. That's not hard. But you don't want to continue producing the same amount of things for less demand. That's not how the market works. The market wants to correct itself. So as demand goes down, prices go down, and then supply follows. You don't want robots to keep the supply high. And also, robots will be competing against these unemployed youth, the very people that you don't want to be out there with nothing to lose. They are the ones the robots would be replacing. So robots and automation doesn't fix this problem. As for the property boom, it was driven by cheap money. Buying an apartment was a no-lose proposition for millions of Chinese who plowed their life savings into empty cities that apparently cannot defy gravity forever. And that those ghost cities for years, I remember watching a episode of the Kaiser Report, back when Max Kaiser was with RT. And they were showing how brilliant China was and how they produced this subway station way out in the middle of nowhere, and then people were making fun of China, and then 5 years later there's all this stuff built around it. But it was all fake. It was all fake. These are all ghost cities, and they can't defy gravity forever. Meaning the main solution, and China's go-to whenever the economy slows, is to crank out more cheap money by cutting interest rates and handing tens of billions more to home builders. Okay, this is where I kind of start diverging from Peter here a little bit. Yeah, they cut interest rates, but interest rates fall naturally as money gets tight, as profits get squeezed. People don't want to take out new debt. This is the interest rate fallacy. Falling interest rates doesn't stimulate demand. Falling profits creates falling interest rates. And then once all of that bad debt gets liquidated out of the economy, then the demand comes back. So yes, there is a connection between falling interest rates and increasing demand, but it's in the reverse order. Okay. Let's continue. The problem is that China is now swimming in debt. It has 50 trillion in non-financial debt, even higher than the US as a proportion of GDP. This raises fears of a Japan-style deleveraging, leading to potentially years of slow growth. Deflation, of course, makes those debts even bigger. This limits China's easy options. So domestic deflation, because you can't sell your things for as much profit and paying off the debt, but also a lot of that debt is denominated in dollars. And if the dollar is rising against the yuan, they're going to have a harder time paying off that debt as well. It is a doom loop of debt here. But I think that Japan-style deleveraging is the best case for China. North Korea is the worst case. The overhyped China story. China taking over the world has been the story of the decade and actually goes back further. Graham Allison came out with the Thucydides trap. I believe he wrote that in 2005. Someone will have to check me on that one, but I think the original article came out in 2005 and the book came out in like 2008 or something like that. But no, this has been going on a long time. And of course, the global Marxists in Davos and Brussels and Washington, they like that China looked like a successful communist nation. And they wanted China to become the global hegemon. They wanted that, Maoism they wanted to use Maoism. They are using Maoism over here in the West. So they pump this up. That's why a lot of the academic circles really love China, and really all the think tanks and stuff, they produced all this stuff about China taking over because they wanted it to happen. Okay, in reality, President Xi's decade-long rule has been terrible for the Chinese economy, replacing China's free market miracle with regulatory crackdowns to hobble any political threats and channel capital to state-denominated industries. The upshot is growth under Xi has been about 5 to 6%, a far cry from the miracle days and pretty standard for a poor economy. So here's a chart, foreign direct investment, and it is net negative now out of China. Money is fleeing China, and this is the thing that built China. Just look at that. Billions and billions a year flooding into China, and they got paid. But now it's unraveling the other way. Xi's COVID lockdowns have been monumentally destructive. His post-COVID recovery has fizzled, and now China is running straight into global recession. Xi is probably too careful to say invade Taiwan to soak up all those unemployed youth. But then I thought that about Putin too, and I was wrong. As for the US and Europe, expect China's manufacturing problems to flood us with cheap goods, which is great for consumers and should take some of the edge off of inflation in the short term, at the expense of wiping out what's left of American and European manufacturing. I mean, no, there is a ton of investment in American manufacturing right now. I do think that Germany has specific problems. I'm not quite sure about the other European countries. I think France is doing okay in that respect, but they are having troubles with their African, former colonies. But the U.S. investment in manufacturing is booming right now. So I don't think that's going to be a one-for-one trade-off here. Deglobalization, you're going to have to rely more on domestic production all over the world. And the U.S., with its deep capital markets, is going to be best suited to finance that new domestic production. All right, so that is all he has for his Doom Loop article. Again, Peter St. Ange. Follow him on Twitter if you can. But all right, that's going to do it for today, guys. Thank you for joining me. Ansel Lindner, Bitcoin and Markets. Check out bitcoinandmarkets.com that you're seeing right here. Also, the Telegram is t.me/Bitcoin and Markets. What else? That's it, guys. I'll see you on the next one. Bye.